Hey everyone, welcome back to the channel. If you've been watching your portfolio swing this year, you're not alone. The stock market in 2025 has been a roller coaster of rebounds, rate cuts, and lingering risks. Today, we're breaking down the key trends so far, from major index performances to sector shifts and what might come next. Whether you're a seasoned investor or just dipping your toes in, this analysis will give you the insights you need. Let's jump right in! First off, let's look at the big picture. How has the market performed year to date? The S&P 500 has climbed nearly 14% through September, building on a strong rally from its April lows. That's impressive, especially after a rebound in the second quarter where equities pushed higher despite ongoing challenges. The Dow Jones Industrial Average, S&P 500, and NASDAQ have all seen gains. But with some September softness, historically, this month is the weakest for stocks, and 2025 is no exception. As of late September, the Dow closed at around 46,247, up 0.65% on the day, while the S&P hit 6,643, up 0.59%, and the NASDAQ at 22,484, up 0.44%. However, weekly dips showed the S&P down 0.3%, snapping a three-week winning streak amid a broader market downturn in major indices like the NASDAQ and Dow. One standout trend this year? The rotation towards small-cap and value stocks. Small caps, tracked by the Morningstar U.S. Small Cap Index, rose 4.58% in August alone, outpacing large caps at 1.98%. Value stocks are also shining, up 5.05% that month, while growth lagged at just 0.40%. This shift is partly fueled by expectations of Federal Reserve rate cuts. The Fed delivered a 25 basis point cut in mid-September, bringing the federal funds rate to 4.0%, 4.25%, with more easing on the horizon. Lower rates are boosting undervalued sectors like real estate, which jumped 3.08% in August, and communications, both trading at attractive discounts. On the sector front, we've seen mixed signals. Healthcare rebounded strongly with a 5.49% gain in August, offering value in areas like medical devices and tech. Despite being the year's worst performer at just 1.41% YTD, energy rose 3.43% last month but remains under pressure from shifting global supplies. Tech, once a darling, has faced headwinds. High-growth stocks are cooling off, with the market advising underweighting U.S. tech in September to play the odds. Emerging leaders include innovative infrastructure, domestic manufacturing, and cybersecurity, signaling a new profit cycle amid these changes. Economic factors are driving a lot of this. Second quarter GDP was revised up to 3.8%, showing resilience, but forecasts point to slowing growth. U.S. GDP is expected to end the year at 1.4%, with unemployment at 4.5%. Inflation remains sticky. Core PCE hit 2.9% annually in August, in line with expectations but above the Fed's 2% target, averaging 3.6% over the past 5 years. Geopolitical tensions and policy uncertainty add risks, potentially hitting vulnerable sectors. Globally, emerging markets growth is forecast to slow to 2.4% in the second half, with central banks cutting rates. Looking ahead, the outlook is cautiously optimistic. The small-cap rally could continue if economic reacceleration kicks in alongside Fed easing and falling long-term rates. Two of those boxes are already checked. Over the next decade, U.S. equities might return 3.3% to 5.3% annually, with value outperforming growth. For investors, focus on high-quality earnings growth, diversify into fixed income for those attractive yields, and consider overweighting gold or international bonds to navigate September's typical slides. Remember, higher rates are here to stay structurally, so adapt your strategy to long-term trends over short-term noise. There you have it, an in-depth look at 2025's stock market trends so far. It's been a year of shifts and opportunities, but with risks lurking. What trends have you noticed in your investments? Share in the comments below. I'd love to hear your take. If this analysis helped, smash that like button, subscribe for more market breakdowns, and hit the bell for notifications. Thanks for watching. Catch you in the next one.